When to buy ugly. That's the topic of this week's Stock Scores Market Minutes. If you're not already a subscriber to this YouTube channel, I encourage you to do so to get instant alerts when a new video is uploaded. As well, you should subscribe to the Stock Scores weekly newsletter at the address on screen, stockscores.com/newsletters.asp. All right, let's talk about this concept of buying ugly. There is a time when it is good to buy weak markets. And certainly in the market that we've seen in recent months, buying weakness has really done well. The reason is this market is in an upward trend, but if you chase the market higher, you end up getting into stocks too late, often getting stopped out. On the other hand, if you buy the pullbacks into the lower region of an upward sloping channel, you can buy into the market when it's on its swing from ugly to looking pretty good. Now, lately these swings have been pretty short-term in nature, and so we have to be pretty quick to do some of that, but we'll show what I mean in a chart here in just a moment. We ultimately want to look for signs of a turnaround on the chart of a shorter time frame when the longer-term time frame has pulled back into the lower region of the channel. All right, that's a mouthful. Let's look at it visually so you can see a little bit better what I mean. So here we have the upward sloping channel that the S&P 500 has been in since June. And every time the market pulled into the lower boundary of this upward sloping channel, which I've highlighted in green, we get a pretty good bounce. And individual stocks during those time periods have also done quite well. And so the idea then is to, maybe not chase stocks if the overall market is in the upper region of that upward sloping channel and be a little bit more patient. On Friday of last week, we had a big sharp sell-off, took the market back down to the bottom of its channel. And even this morning, we saw weakness on the open, which turned into strength at the end of the day. Why? Well, it bounced off of support at the channel trend line. It also bounced off of support at the little flag line that you can see here at my mouse. We had a little flag building in the last couple of, probably 6 weeks or so. And there's a lot of reasons there why the market bounced. And those are the times when really it feels really difficult to buy because the overall market remains in that upward trend. We want to fight the ugliness of the market and look for opportunities. Now here is the intraday chart of the S&P 500, and you can see that we broke downward trend lines on the 15th of October. That led to a nice rally, and today, at the end of the day, we started to get some strength. Didn't really break that downward trend line yet, but certainly a good sign that the market is going from ugly to better in the near term. All right, let's do our normal analysis of the market. Here's the chart again of the S&P 500. And you can see that the market has been in a flag pattern. I've highlighted that with the two slightly downward sloping lines in the top right of the chart. So we had an upward trend into that flag. The market pulled back to the trend line, is now bouncing from that. I don't really see a reason to be a raging bull right now. I think that the upside is only a couple of days long before we hit that red line on the chart again. So my feeling right now is the market's in a waiting game. It wants to know what's happening with the election. There's uncertainty in the economy. Is it getting better? That sort of thing. But we shouldn't neglect the fact that this market is in an upward trend, and upward trends have a tendency to overcome weakness just by their sheer momentum. And so I feel like the market probably bounces higher this week, goes back into the top region of that little flag pattern. Now, if we have a bad day and we really make a decisive break through 142 on the S&P 500 ETF, well, then we got to take a bearish stance. But for now, I'm neutral on this market. The TSX has been trending sideways in more of a pennant pattern, a little different than the flag. We've got quite a bit of volatility. There's a good deal of uncertainty in the market, but the market is still in an upward trend. It started that in August, and therefore we have to remain optimistic that the trend will continue. But in the short term, I expect more sideways trading and relatively few trading opportunities in the Canadian stock market. There are, however, some pockets of strength. Precious metals had a decent day today in terms of the stocks, and so we may see some money coming back into that. Also, coal and natural gas-based stocks have been doing well of late. The Russell 2000 is in a flag pattern, took it back to the upward trend line and is now bouncing from that. I'm not crazy about the chart because there's quite a bit of volatility there, but when this market gets going, if we can get a break through 84, for example, we could go for another good run. And so I think that keep an eye on this one, but as for now, I would still be pretty cautious with the small caps. The treasuries continue to hold under that downward trend line highlighted in red. That's a good thing for the stock market because it means that money is looking for risk, doesn't want to sit there buried into the low returns of the 20-year treasury bond market. Um, my only concern here is we're starting to see a little head and shoulders bottom building. If you look here, we've got a shoulder on the left, the head on the right, and this could possibly be a right shoulder if we got a break of the red line in the near term. That would be a reversal pattern. That would coincide with a breakdown in the stock market, money looking for safety in treasuries. I don't think it'll happen, but it is something to watch for. US dollar is in a downward trend, but flirting with the downward trend line. We can't neglect the fact that the U.S. Federal Reserve is going to print a lot of money. They're buying up to $40 billion a month in mortgage-backed securities and different bond products. And that is really a devaluation of the U.S. currency. Now, the only thing is everybody else is devaluing their currency as well with the printing of money. And so it may be that the U.S. dollar is able to rally simply because it's the best of the worst. So we want to watch that trend line for a break because it will affect commodity price stocks or commodity stocks. Of course, commodities tend to be priced in US dollars, so things like nickel and copper and gold and silver become more expensive if the US dollar goes up. So that's why I watch this chart. It's just helpful for the commodity-based economies like the US, or pardon me, like the Canadian and Australian economies. Here's the chart of the gold ETF, GLD. It really ran away from its upward trend line. We're now working on a pullback to it, but remains in an upward trend. I think it could still do a little bit more of a pullback. I mean, it bounced back a little bit today after the weakness on Friday, but I'm not ready yet to say that its short-term profit taking is done. Did see some strength in some of the gold and silver stocks today, and that's encouraging. But I'm optimistic in the longer term, sort of neutral in the short term. Here's a chart of oil. You can see that a falling top has set up and we're breaking down from a falling top and the downward trend line is intact. So I feel rather negative on oil. It's not a strong breakdown yet, so I'm basically on the negative side of neutral with oil right now. I've added in a few more charts because natural gas has done quite well over the last 2 months. So I thought I'd throw in a chart here of the natural gas ETF UNG. It is at the top of its channel now. So we've seen a lot of strength in some of the natural gas heavy energy stocks. But given where we are in this channel, we should probably see a short-term pullback in natural gas, which should cause a short-term pullback in some of those stocks. So keep that in mind. I mean, I like the trend that's happening in natural gas, but I do think that some short-term profit taking is likely. Coal is benefiting from the strength of natural gas because, of course, if natural gas gets more expensive, then electrical utilities will move from natural gas to coal to fire their turbines. And what we're seeing here is optimism building in the coal chart. I apologize, I put natural gas on this chart. This is actually coal, the market vector's coal ETF. It's testing some resistance there. We've seen a lot of the coal stocks do well, and certainly we could see a breakout here, and that would be the start possibly of a new upward trend in the coal stocks. All right, so US, I'm basically neutral in everything, but as I said, kind of on the optimistic side of neutral for gold, on the pessimistic side of neutral for oil. Short term, I think the US stock market probably bounces for a few days, but doesn't have great upside until it can break out of that flag pattern that it's in. Basically, we're at some support after the sell-off on Friday, and so we should see a bounce back after the selling late last week. A rally is likely short-lived because of that overhead resistance, making it necessary to take a short-term view to trading right now. This election in the U.S. is weighing on the market. People aren't ready to act until we see some visibility on what's going to happen in the United States, particularly with the fiscal cliff that's upcoming. So there's all these headwinds that really don't make people want to sell, but they also make people not eager to buy. Well, that has been the Stockscores Market Minutes for October 22nd, 2012. Have a great week in the market and trade well.